What's up, everybody? Welcome to the Stocks channel. My name is Cory, and today in the stock market we had a very volatile day with a lot of selling across the board in all of the indices going into quadruple riching tomorrow. What should you expect going into tomorrow, and what are the critical levels to pay attention to? First up, let's take a look at the NASDAQ 100 QQQ ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, tonight we're going to dig into the wave structure on the QQQ ETF so that you can really understand what the price action is doing at these levels. This is probably going to be a little bit longer of an episode, but if you pay attention and you follow along through, it should help you in your trading understand exactly what's going on with the price action. So we'll jump over to a 1 hour chart in a minute here, but let's quickly look at the daily chart and break down the price action. We did go down over 3% today, and we closed below all of the moving averages yet again. Remember, the last 3 days we were starting to close back above all of the moving averages, and we were back above the 20 simple moving average. So that was bullish price action. And we were also starting to develop some bullish trending as well. Now, one thing to note about yesterday and the day before is that we did fail to break out above 324. Why is 324 level so critical? Well, if you look back at where 324 was putting in resistance before, we see the market is struggling to break above that level. Now, that's not necessarily bearish, but it does mean that it's a strong resistance level. So the significance of that resistance level is that if we do get a break and close over 324, that's going to be a daily higher high, which is going to favor a bull market. So as far as critical resistance levels go, the most critical level on the QQQs is definitely 324. While we're below 324, it's possible that we continue to go to lower lows. And while we're above 324, it's more than likely that we're going into a bull run and we're going to continue to form higher highs. So right now we're still in a crossroads situation because we had this nice bull rally off the lows, but we're coming into that critical resistance and we're currently seeing selling coming off of that level. Now I'm going to draw a bull pattern just for reference so that when we go into the 1 hour chart, you understand what we're looking at. If this was an impulsive wave 1 off of the low and we're currently pulling back in a wave 2, the question is, where is this wave 2 going to end? Last night I talked about the possibility that it ended at 316, 314, or 311. But tonight I want to give you some new levels to pay attention to and give you some other possibilities. In Elliott wave theory, there is no rule on where wave 2 has to end. It could, in theory, come all the way down to the bottom of wave 1, but more than likely, it's going to stop somewhere above that bottom, somewhere around 307 or 308. Now remember, it doesn't mean it has to. It could come down here and we could still get an impulsive wave 3 off of that low. So right now, I'm just going to draw in wave 3, 4, and 5 for reference because we're not going to get into those tonight. I want to focus more on wave 2. So we did close right around 312 on the QQQs, which could mean that we did see the bottom of wave 2. However, that 312 level isn't really a critical support level, so that's more than likely that we're still got to test 310 or possibly even 307. Now this is going to be painful, and this is going to feel like the market's going back into a bear market after this correction. That's recency bias. Everybody has that correction on their mind, and that's the first thing they look to when they see the market selling off. They immediately look at the correction and they immediately think we're going back into another correction. That doesn't mean we can't be going back into another correction, but just remember to check your emotions and leave them out of your trading. Follow the price action and follow the critical support and resistance levels. Yes, we could go lower, and that's why we want to prepare for all scenarios. So I'm going to give you bullish scenarios as well as bearish scenarios tonight so that you can better prepare yourself for exactly what the price action is going to do. Now, just zooming out real quick, don't forget in bull markets, people look at pullbacks as possible buying opportunities because the recency bias says after dips, you get rips. And people make those connections that pullbacks mean they're going to make a bunch of money if they buy the lows and then they wait a little while for it to run back higher. Now, that recency bias will get a bull trapped when they see a pullback like this at an all-time high. They think it's going to go higher, and then obviously you get stuck into a correction. So recency bias is a dangerous game to get into because it only works until it doesn't. Following the price action is much more technically sound, and it allows you to know where your risk levels are. So right now, the best way to define your risk on the QQQs is have an exit strategy if we start closing below 310 or 307. Normally, if you have an exit strategy, you're willing to take on more risk because you know where your risk is defined. If you're buying blindly and you're buying the first sign of a pullback and you have no idea what levels you're trying to buy off of, and you have no accumulation strategy of where you're going to buy and where you're going to exit if things go against you, then you're not ready to be a trader in this market. If you don't know your strategy and you don't know how to execute your strategy, you're better off just not trading at all until you develop your plan. So in this example, you would have a buying strategy where you're going to decide if you're going to buy any at 310, and if we break below 310, you want to decide if you're going to buy any at 307. If we break below 307, you could either set a stop loss on how much you want to lose before you get out of that position, or you would be looking to sell on the next bounce and try to minimize your losses. So we're going to jump over to a 1 hour chart here, and I want you to remember this 1, 2, 3, 4, 5 wave structure. In a bull scenario, it means we would be going higher and we would currently be in this wave 2. So jumping over to a 1 hour chart from the lows of that correction, it is possible that we went up in 5 waves, which I'm drawing out for you right here. So the 5th wave would have ended on March 16th when we saw the price action get into that resistance level at 324. So remember that after 5 waves, we're expecting a counter trend move in the opposite direction, which is a correction pattern, which is an ABC. If you've been following my channel, you should be well versed in ABC patterns by this point, and you can see that we're in a very well-defined ABC pattern right now. So this defines the larger wave 2, and the question we need to answer is, where is this wave C possibly going to end? So the levels I want you to watch on where wave C could end are 310 and 307.60. So be prepared for the market to come all the way back to 307.60 and still be in a bull market. It doesn't mean that we have to be in a bull market, but if we do bounce off these levels and we start heading higher, it's very likely that we're going to see a very nice trend in the NASDAQ 100, which could be very profitable if you get in at these lows. Now remember, getting in at these lows does come with risk, because if we continue to go lower, eventually you will need to sell for a loss. So know your risk, but understand your possible reward. You can't get rewards in the stock market without taking on any risk. So buying low like this is a dangerous strategy if you don't know when you're going to exit. You don't want to just assume the market's going to go higher and hold that position forever. Unless you're a long-term investor, then none of this information really applies to you. So in this scenario, this ABC would be the wave 2, and this smaller 1, 2, 3, 4, 5 wave structure would be the larger wave 1. So I'm going to delete these now and show you on the 1 hour chart what this looks like on the larger scale, which is the daily chart. So this would have been wave 1, and we're currently setting wave 2. So that's how Elliott wave works, and that's what you're watching for if you're bullish on this market and you're looking for long entries. You want to look to buy off these support levels, which are 310 and 307.60, knowing that your risk is set at some level below 307.60 and you need to have an exit strategy. Now in the bearish scenario is we're just getting started heading lower and we're starting to see the first wave down. Now in a bear scenario, you would be looking for a possible 5 wave structure down, and you would be looking for something like this. Now in this scenario, you're watching the price action to see if it bounces off support and gets rejected at resistance levels and continues to head lower. So remember what I always say, if you're looking for a trend and you're looking for a trade, you want to wait for the confirmation. So when the price goes to a lower low and it takes out this low, this would be your entry, knowing that your risk is set above your buy point. So you can play this market in either direction. You can short at resistance and cover at support, or you can buy at support and sell at resistance. Either way, you can make profits by trading in this market. That's why they say that bulls make money, bears make money, and pigs get slaughtered. If you're greedy, you're not likely going to make money. And if you're guessing, you're only likely going to get lucky. You need to have a strategy, whether it's a short strategy or a long strategy, and execute accordingly. So in this bearish scenario, you're looking for the same exact support levels that you're looking for in the long scenario. The only difference is you're going to form lower highs and lower lows in the bear scenario. And in the bull scenario, we're going to bounce off of one of these supports and then start making higher highs and higher lows. So either way you play this market, just understand you need to watch the price action, and how the price action behaves at these critical levels is going to tell us whether the market's going higher or lower. Right now, I would love to be able to tell you the market's definitely going higher or definitely going lower. But when I see price action that could go either direction, we need to watch how it's going to act off of these levels on the support levels. If you're on the Stocks Channel Discord, as soon as I see it playing out a certain way, I will alert you immediately. But right now, I want you to be prepared for either scenario, knowing that the critical support levels are 310 and 307.60. If we break above 324 and we get a close over that level, I'm bullish on this market no matter how you look at it. You can't get a higher high close on the daily chart and think bearish thoughts. That's going to be the indication of a bull market, and that's why I said last night that if the market closed over 324, the smart money would be making it way too easy for us. If they allowed this market to close over 324 on this bullish rally yesterday, into the end of the day, it would have been very obvious that the market would want to go higher. Instead, they left it up to guessing and they left it up to chance on whether the market would break above that level or sell off today. And as you can now see in hindsight, we saw selling and we are going into quadruple witching tomorrow. So remember with quadruple witching is there's no guarantee that the market has to go lower on quadruple witching day. So don't be shorting this market and don't be getting all bearish just because of a feeling. Watch how the price action behaves at 310, and that's going to be the first indication if that level breaks down that we're likely going to see 307. If we get down to 3010 and we start bouncing and blasting through upside resistance at 313, the market could start running and we could be finishing out that wave 2 and getting ready to go into that wave 3. So just real quick, let's recap this on the triple Qs and let's go back to the daily chart. The critical support levels I want you to watch are 310 and 307.60. Critical resistance is going to be all of these moving averages, which is right around 316, and then of course 322 and 324. Everything that happens between those levels is strictly just going to be chop and it's going to be noise. Those are the critical levels that are going to tell us whether this market wants to go higher or lower, and we just need to be patient and we need to have a trading plan so that we know how we're going to trade this market no matter what happens. Next up is the S&P 500 Spy Etf, and we saw Spy going down 1.45% today and closing right above support at that 13 EMA. We did have a support level on Spy which was holding up for a few days around 394, and that level did break down today. So that level is now going to be a resistance level yet again, so watch 394 as possible resistance. If we break back above 394, we're still going to have resistance at 397. And then of course above there we have our price target at 404. So don't worry too much about 404 because we still have to break back above 394 and 397 before we worry about that higher level. Downside support is going to be right around the 20 simple moving average, which is going to be the most critical support level. That level is right around 388, and if we do start breaking below 388 on SPY, that's going to give us more bearish probabilities on the stock market as a whole. So if you're bullish, you want to see SPY holding up above 388 and trying to break back above resistance at 394. If you're bearish, you're looking for a close below 388 and you're looking for another retest of the 50 EMA down at 384. Next up is the Dow Jones ETF, and we saw the Dow Jones going down 0.43% today. The Dow Jones is by far still looking the most bullish of all. It's still holding up above the 5 EMA and we still have a very strong bull trend. We're still in all-time high territory with a price target up here at 336. Critical support levels on the Dow are all the way down here at the 20 simple moving average, which is right around $320. In order to see those levels, we'll need to start breaking down below support at 327 and start reversing this bullish trend. On the Russell 2000, we saw huge selling today going down over 3%. Now, if you watched my weekend video, I did show how extended the Russell 2000 is on the monthly chart, so this really shouldn't be that surprising. Remember that charts just can't go too far too fast without seeing some selling and seeing a pullback. So while this isn't necessarily a bad thing for the Russell because it's cooling off, which will allow it to go higher, I'm not bullish on the Russell because of how far extended it is. You can see it had a huge bearish day with a huge red candle, and it came all the way down to the 20 simple moving average around 224. Now we're still in a bull trend and we're still above the 20 simple moving average on the price action, so we still want to look at upside price targets. So on the Russell, we're still looking to upside price targets of 227 and 233. Now if we start breaking below the 20 simple moving average, you're looking for a retest of the 50 EMA, which is now at 217. On the ARKK ETF, we went down 5.8% today, and we're heading back down towards our support level at 117. Remember on ARKK that it's still in a bear trend, and it still has bear price action because we're still closing below the 20 simple and the 50 EMA. You don't want to get bullish on something like ARKK because it doesn't even have bullish price action or bullish trending. Right now, you're better off being an ARKK bear or just being neutral on the ARK ETFs until we see a reversal of the bear trend. So watch for possible support at 117 and the trend line down here at 112. Upside resistance is going to be the 20 simple at 128, the 50 EMA at 132, and if we can break back above there, we still have resistance just above at 135. Next up is the VIX, which is our fear indicator. And after 2 days in a row of the VIX closing below that $20 support level, we finally saw a spike in the VIX. Now this isn't that surprising because nothing can go down in a straight line forever without any bouncing. So you see the VIX was bleeding out and it finally got a little bit of a bounce today and it closed right at resistance at 21.6. Now this doesn't mean the VIX can't go higher just because it closed at resistance, but we are in a bear trend and we do see the VIX heading lower on the price action. So seeing this bounce could just be a dead cat bounce in the VIX as we see a little bit of volatility in selling today. So look for the VIX to try to break back above 21.6 if we're going to see continuation of the selling, and then you would be looking for VIX levels of somewhere around 25. However, if the VIX reverses course and continues to close back below 20, that's going to be a very bullish sign for the stock market, and that will make me more likely to want to buy the dip and then ride this market for the next bull rally. So the VIX is at a very important pivot right now, because if it starts going higher, that gives us more probabilities of bearish scenarios, and if it starts going lower, it gives us more probability of bullish scenarios. On gold, we're still slowly trending up towards our price target up here, which is still at 1761. On silver, we did tag our price target at 2658, but we did see selling once we got to that level. So the question is silver going to try to break through that level, or is it coming back down towards support at $25 now? On Bitcoin, we started to peek our head over that price target at 58,600, but ever since we got to that level, we started to see selling. We're still in a bull trend, and we still have bullish price action, so we don't want to get bearish on Bitcoin just yet. Price targets are above around 59,000 and 62,500. Remember that Bitcoin is very extended on the monthly chart, and it's due for a big correction. It's only a matter of time. So I'm not bullish on Bitcoin. I'm not a buyer of Bitcoin at these levels. And if you're not already in Bitcoin, I don't suggest trying to buy at these levels. Remember that all things need corrections, even if they're in bull markets. So while I am bullish on Bitcoin, I understand that it's not the best time to be buying it, and I could get much better prices if I'm just patient. On Amazon, we went down 3.44% today, and we came right back to support at 30.30. The question is, are we going to bounce off this level or come back down to the next support level around 29.50? Upside resistance is going to be 30.90 and the 50 EMA at 31.50. On Tesla, it's very similar to ARKK, and we're still in a bear trend, and we still have bearish price action. We haven't closed above the 50 EMA, which is now at 713, and we still have a bearish trend. I'm looking for Tesla to come back down towards support around 618, and if it breaks below that support level, there is another support level down here at 550. Upside resistance is 696 and the 50 EMA, which is right around $712.50. On Apple, we went down 3.39%, and just like Tesla, we're still in that bearish price action and bearish trend world. The price action's below the 50 EMA, and the trend has not quite reversed, and we haven't quite crossed back above to the bull side. We're currently sitting right on support at 120, and if that level does break down, the next support level is down here at 116. Upside resistance is 123 and the 50 EMA at 126. On the financial sector, we went up about 0.5% today, and we're still trading above the 5 EMA with a very strong bull trend. On the industrial sectors, we were flat on the day, basically going nowhere by the close, still over the 5 EMA, still in a very strong bull trend. On the energy sector, we got absolutely obliterated today, going down 4.49% and closing below the 20 simple moving average. You could see the bullish trend is in threat of going bearish, and we're starting to look like we're getting ready to cross to the low side and start going into a bearish momentum trend. The price action's already bearish below the 20 simple moving average, and it looks like we could be well on our way to retesting the 50 EMA. On the healthcare sector, we dropped about 0.25%, and we did close below the 5 EMA. You can see we're developing some bullish trending, however, and it could just be a pullback before we continue the bullish rally. So jumping back over to the S&P 500, you can see that we are seeing some weakness in some of those previously strong sectors. The energy sector saw a lot of selling today, but we still see a lot of strength in financials and industrials. The tech sector got absolutely hammered today, but the healthcare sector didn't do so bad. So we're seeing sort of a mixed bag of volatility, and we're not seeing selling in all of the sectors just yet. That's good news for the grand scheme of the bull market, because it means that we're not seeing everybody running for the hills across the board in all of the sectors. We're still seeing some sector rotation and volatility, which is completely normal going into quadruple witching. So remember to watch the price action very closely at all of those critical levels I gave you. The market could easily go back into a bull rally, but it could just as easily start correcting, and the correction could deepen, and you want to be prepared for either scenario. It's times like these that the market is very tricky because it's confusing people in both directions. I can assure you that bears are getting tricked just as much as bulls are getting tricked right now. So don't be married to any of your trade ideas, and be ready to flip a switch at any point and switch directions, or completely bail on a trade altogether. And on that note, that's the perfect transition to our trade idea Palantir. Last night I told you on this 1 hour chart that if we closed below this level at 24.50, it was probably better just to cut bait and exit this trade. So on Palantir, that doesn't mean that it can't go higher from these levels, but it does look like it could be coming back down towards some of these support levels. So whether or not you want to hold this trade and try to average down, or just completely cut bait completely, is up to you. But as you can tell from this chart, we did break down below this support level, but again, we saw a lot of selling across the board in the stock market today. So did that drag down Palantir, and it's really going to go higher from here? Only time will tell. So watch support levels at 23.30 and 22.40, and upside resistance is now going to be 24.50 and 25.40. Our next trade idea is Shopify, which we saw going down 4.45% today, but it's right on top of one of our buy levels at 11.11. You also have support levels at 10.80 and then down here at 10.30. Upside price targets are 11.30 and 1200. And then finally, this will be the last time you see Lockheed Martin on trade ideas because we finally hit our last price target. We got up to that 357 level and actually closed above it, which means we could still continue to go much higher. But we've now hit all of the price targets, and if you've been following Lockheed Martin, it's been a great stock to trade throughout all of this volatility. You can see Lockheed Martin was up over 2% today, even though the rest of the stock market was basically red and selling off. So don't forget to trade some quality stocks like Lockheed Martin because they're really good for your portfolio to have stocks that are green when the rest of the market is red. Remember, if you're looking for more trade ideas like these, I add more weekly on the Stocks Channel Discord. If you're interested, you can find out how to join the Discord server by clicking on the link in the description of the video. So thanks for watching, everybody. Remember to stay disciplined and patient in this volatile market. And as always, I will see you in the next episode.